But let's quickly first pull up our Insecticides India and see what the counter is doing in trade. Revenue is up around 10%. The stock is seeing cuts of around 3.5% right now, but profits have risen around 15% as well. We have Rajesh Aggarwal, Managing Director at Insecticides India, who joins us on the show. Rajesh, good afternoon and welcome to the show.
Yeah, good afternoon.
Rajesh, my first question coming to you overall is, if you see in terms of where the quarter gone by, first and second are typically the highest in sales, and usually you see something lower, for a company like yours in the second half. What is the trend looking like now? Do you think you'll be able to maintain this? And what's that number looking like for FY25?
Okay. Yes, it's a cyclic business, so the major business comes in Q1 only. Majority 60% is gone, so it's balanced 40%. The expectation from Rabi season are good. Why? Because it has rained consistently, and that rain has demolished some of the sprays in the Kharif season, particularly in the month of September. So but it has given the opportunity for the farmer because a lot of water is available, the reservoirs are full, so farmer is going to sow his choicest crops like the rice sowing in this country. The entire country is going to increase in the Rabi season. The wheat sowing is going to increase. Some sow is the case of maize and some other crops. So farmer is going to sow his choicest crops. The vegetable have seen some hit because of the continuous rainfall even now. So overall expectation is good actually. So we believe that the second half of the year is good, but it cannot never match the first half actually.
So Rajesh, would it be right to say that around 1100 odd crores, 1100 to 1200 odd crores in terms of revenue is what you would be targeting in terms of FY25 as a whole? And similarly, from a profitability perspective as well, the company will be able to cross that 100 crore mark?
In the first half, yes. In the first half, we have already achieved 1100 crore plus, and in terms of the profitability, last year the full year was 102 crores. This year the half year PAT margins are 111 crores. So we have already booked 111 crores, and these 2 quarters which will be coming now, they will also be positive and much better than the previous year. So the expectation of profitability is quite high, and in terms of the total sales numbers also, so we should be crossing last year's number in total.
Right, thanks for that, Mr. Aggarwal. This is Rucha Somaya joining in. As you rightly mentioned, you're quite much bullish on the profitability side, but can you just tell us the levers that will support the EBITDA margin going ahead in the second half?
Yeah, the majority, we have focused on premiumization of the products, and we are continuously focusing on launching the new generation agrochemicals. So two things we have done. Number one, by collaboration, we are bringing the new technologies. Number two, we have made the mixtures and we have bagged the patents for these mixtures, and we are trying to launch these mixtures into the market. So both the strategies are playing very well into the market, and we are able to bring the new solutions to the market, and we have launched many products in the recent years, and continuously these products are on the launch. Like even now, there are about 4 products which are in pipeline, which we will launch in next 1 month. We have launched recently some products out of this also. So a lot of launches are there, and with these new products, we will be focusing and establishing the brands out of these products only. So the focus is like from the straight products, we are going slowly towards the mixture products, because mixture products are providing the complete solution to the farmer. Number one. Number two, they enjoy relatively lesser competition because they are the solution providers to the farmer, so they are gaining popularity with the farmer. So with this, we are very confident that we will continue the premiumization of our business, and we will continue with these new products.
Right. All right, Mr. Aggarwal, my next question to you will be around the volume growth for FY25 as a whole. In the Q1, you had mentioned that you would expect the same to be around 15% to 20%. So do you still think that that's achievable for FY25?
In totality, yes, that number might not come because in Q1 it was around 15%. In Q2, the premium product have seen the increase of about 10%, but there is a decline in the generic product because of continuous rains. But in the second half also, I see some growth coming year on year. So there will be growth. Difficult to give the numbers, but I can say that both the top line and the bottom line, you will see the growth in the second half, again the Q3 and Q4.
Right. Rajesh, overall, if you see from a margin perspective, a good number, a very strong number that has come in this time around at 14.3%. Now, the material cost has been lower as a percentage of sales. Do you think you will be able to maintain this going ahead? Because clearly, even your B2C segment has been increasing, and usually the retail segment is always a margin accretive business, right? So, is that going to be the strategy, and will you be able to maintain that 14 to 15% kind of a margin in the remainder of the year?
Very difficult to say that, because we have been targeting 10% plus type of margins. So yes, in this quarter, B2C has seen the increase. In the next quarter, I believe B2B will also be showing increase, and export business also. But yes, we are trying to convert our entire portfolio into the profitable portfolio by changing the product mix. So we are focusing around the premium products in all the three segments. So that will give us the edge into the market. But maintaining the same number might be a little difficult. But yes, I can say that in these 2 quarters are also going to post a good set of numbers, with the increase in the bottom line also along with the top line.
Okay. And when you talk about the top line as well, how much do you think will the Dahej expansion contribute? I mean, will it be on stream in this current financial year? And if so, what's the contribution this year? And how much will it increase to next year?
Okay. Dahej contribution will start in this year, but it will be a little lower, because the major business is going to come up in the next year itself. So next year again we'll be focused, and we'll be targeting a 15% growth of top line along with the Dahej. Dahej will be instrumental in this. But this year there will be minimal contribution which will be coming in terms of numbers. But yes, the plant will be up and running in totality, and we'll start building up the stocks for the new season.
Thanks for that, Mr. Aggarwal. One question from my side would be around the segmental breakup. Well, you mentioned that your focus will now be on the premium products because of its higher profitability. And when we look at the kind of segmental revenue breakout, we see that revenue from the premium segment has gone up from 65% to 68%. So what kind of mix do you see coming from the premium versus the generics segment going ahead?
Like we wish to take it to 75% in next 2 years' time. So we are working around that, so that the premium products share increases in our total portfolio, and we are trying to build up our portfolio in that fashion. So even in B2B segment, we wish to take these products only into the market. So yes, we are working around that. That's a call we had taken 3 years back, that we'll be improving our product mix. So we are very successfully moving around that direction. And for some of the generics, we are moving out. So I can say we are doing the tail cutting in the generic segment.
Rajesh, very lastly, if you see in terms of where the China market goes as well, how are you seeing the impact coming in from there? Because clearly, you know, there has been destocking also that is happening. So what is the Chinese impact?
Chinese have already touched the bottom. It looks like that. The prices have strengthened a little. Today we have seen that their currency has shown some improvements against dollar. So there might be a small 1-2% type of decline, but that is something which we capture, because China will decline, Indian currency has also declined. So overall, the impact will be nullified here. So our currency in 3-4 days has like from 84, the dollar is touching 84.4. Chinese RMB from 7.1 is going to 7.3. So overall, the impact will be negligible actually.
Right. All right, Rajesh. Thank you so much for speaking to us at NDTV Profit. In fact, as we speak, the stock is continuing to trade under pressure in spite of the kind of numbers that we've seen. There you go at the day's lowest levels, with cuts of 3.4% coming in there.